Welcome to TradeNBI.com. This is Jonas reports for the 31st of October. Well, a little bit of a relief rally coming off of the breakdown of the lows. Gets us right about the previous retest of the dip below the red line on the extreme from back there in end of April. And we had the NBI magenta move back over, and we're in that extreme oversold. And we always talk about this when we get DOC red into that, usually minus 23 area, but in this case, it was the super dip of the green all the way down negative 25. That's pretty steep. And even with these, the best you get is like a move back towards the 23%, and then it rolls back over as it tries to improve from a shakeout standpoint. We're going to see that. My thought was is that the push attempt would be towards that 42.34. But again, we see a lot of the issues worldwide. The ground assault, obviously, is the big unknown as it relates to the Israeli conflict, and that certainly is a negative on the market. Not to mention, interest rates. When we look at it from an NQ standpoint, hovering right on that pre-existing retrace of the algo from right back over here at the end of May, and it's still, of course, there's that lower potential down here at the 13,185 if we get continued weakness. And it's going to be interesting to see how strong a dip, if we get it, of the orange DOC right here below the green and then red line. That would be what you're looking for to show any ability of a sustained movement. Otherwise, it's just normal noise in the back and forth. And I think that's likely what we're about to see from this setup there. Because from a good news standpoint, the only thing that would really be good would be some type of ceasefire or end of hostilities. At least that would be at least a bolster um, for where price is, because it certainly isn't happening from an economic standpoint. Of course, we're going to still see a bunch of different numbers going through, and I think it's going to be very difficult for the market to justify some of the levels that things are at, simply given what we're seeing from earnings and everything else. It's I wouldn't even call it a mixed bag. It's more on the negative side, but there's also the idea that, oh, well, we've overpriced in negativity, but um, there's always that underestimation when it comes to a change in economic activity. And if things start to slow, the pace at which they pick up is always unpredictable and usually way off base. And that, given the higher rates that exist, if we've seen enough of the excess pulled out of the economy, then I think that you would start to see an exacerbated move. At least from a interest rate standpoint, you can see it's untethered from where the Fed is, and that's an indication that the market in general is demanding higher return with an expectation that inflation is still not in control and that there's going to have to be an additional pressure on that. Now, of course, as oil eases, that helps, but again, that can change in a dime given the current global hostility position, and that would be definitely a shock to the system. But as it is now, this is much better than it's been, but still elevated. And all we're looking for that was just a retrace down into this positive extreme area, and that's exactly what we're getting. Certainly not seeing a bullish turn back here for oil at this particular stage, so it helps every little bit of it. Euro, they're still pushing it back in there. It was able to hold on to this um, mid 105 range, and that's important because a breakdown further from there would be certainly serious crisis mode. And some of this is related to the idea that maybe the move in interest rates for the U.S., but again, it's still more appealing from a investment standpoint to be in a dollar at this particular stage with the higher rates than you're getting from an ECB. So, as the only thing that really helps is the ease of oil. As long as oil eases, then the euro can support within itself and rise. But the idea that the dollar is dead is clearly an indication when you see the relationship to other currencies. Not so much. From a gold standpoint, no reason why it won't continue its climb. That even if things eased off in that, still definitely a place to be, along with the moving cryptos. Again, just easing off from the dramatic move, waiting for some other kind of news. But yeah, cyan under red on the DOC is always a buy, always has been. And that came early on uh, from the beginning move. So on point with where it is. ETH from its standpoint, same, not as strong, but relatively speaking, has made a significant move. Um, just getting back to the mid levels that it was at before. Nothing extremely parabolic. And you can see from our 50K, we started the other day at the beginning with a positive move from the early open, and that pretty much continued. We created a little positive extreme that filled back pretty quick, and that led to the second wave. And right now, we're just getting, just that classic ABC kind of setup within the move. Right now, we're in a little bit of a soft spell right here from the peak, coming back down. In fact, 50K shorted that one from that move, and interestingly, already a dip below the red line. And when that happens above 50%, usually you're going to get a pretty decent hold on the 50% and or move back up. Usually those are short-lived dips just to kind of clear out any soft hands. So we don't see that as a problem going forward. Probably at the beginning of the month, I'll get into some of what we can look for from a more broader trend, at least from what we're seeing from an indicator standpoint. When we're looking at our intraday, you can see that we started off with the pre-market push, all in positive extremes. They filled that in, took a little bit of carry through going down, stabilized then, and as the midday started to approach, forced short cover took place, and that was a nice ride up. Positive extremes going all the way back to that 4172 range, which was promptly filled here in the post market. Beautiful when that works out like it is. And now the rally coming back up to pretty much where the close was. So it's just a matter of clearing those stops and just the normal activity that we see from there. So nothing too strange from a broader perspective, and I think it just reflects what we're seeing from there and the broader world. There's just a lot of complications, but that's always the case, and probably can go back for years and years, and you hear the exact same things. So we just got to play the readings as they are and continue to follow them, and all been pretty clean so far. But as always, I will continue to update you on Skype chat. Indicators for November will be heading out, so you'll have them set for tomorrow. Have a good one. Trade well.